is Tuesday, April 25th. The time right now in Singapore is 9:38 in the morning, and let's do a bit of a recap of what happened overnight on Wall Street. Basically, equity market has been on standby mode. There is hardly any movements since the whole of the last week, and the beginning of this new week also see no much of a difference. Market is basically treading water, although we are right now in the midst of the earnings season. There's hardly any exciting news until maybe perhaps Wednesday tomorrow, when we have a glimpse of the first quarter GDP reports. So basically the market is right now on standby mode. So hardly any change in views. Nearby support in the Dow Jones about 33,275, upside target about 34,406. So until the market breaks out of either of this bracket, then we can see some new development. Over in the S&P 500, we also see something very similar, although we have a marginal high last Tuesday, but since then the market has been also on sideways consolidation. Hardly any new development again, but this bracket, these prices that we saw last Tuesday at 4,169 is basically within the bracket of prices, which is actually putting it in rather vulnerable to selling pressure between 4,140 to 4,195. This is not far away from the February 2nd high of 4,195.44, which is the year high so far. So I think this could be a barrier. Not sure whether it can take out this price, but if it does, then we also want to see what's the reaction. Does the market is able to close above this level? If it cannot, then of course we could be possibly seeing a setup for a reversal pattern to emerge. But until then, we will have to take a wait and see attitude. Nearest bottom here in terms of technical support is about 4,069.8 levels. So we will have to see whether there's going to be any new development on this front here. Over in Nasdaq, we also saw an attempt to take up the fortnight high at 13,204. But the fever attempt that we saw last Tuesday did not quite make it. It went up to a high of 13,196 and then pull back. But we can see obviously there's some kind of support at this level here, around 12,860 levels, because so far we can see this level, a technical level, seems to be holding up this market. So if this market propel higher from here beyond 13,200, then we may see a new pattern emerge. But again, in my opinion, upside is pretty limited here. When we take a look at Asia, we can see this morning we have a marginal high in the Nikkei 225. We have a marginal high at 28,806.7 this morning. And again, this is going to be interesting because we saw the same thing last Friday. Market took out a marginal high relative to 28,734.8 and then closed as a reversal pattern. But with the new high that we saw this morning, this reversal pattern has been negated. We want to see what they can do with this current marginal new high. If it closes above, then obviously we are seeing something very different. But if it fails and close back down very similar to what we saw on Friday, then it could be setting up for another down pullback here. Personally, I think this is a possibility. Market may not sustain very much beyond what we see here, and I'm biased to the downside for a test of maybe perhaps the 27,000 levels in the Nikkei 225. Now over in the Hang Seng, we continue to see Hang Seng continue to slide. This morning it opens a little bit weak because yesterday we saw the market actually took out the nearby support at 19,885. This morning we have a big weak opening and is setting the stage for further losses going forward. The next area of support possibly can be found around the 19,000 levels. Again, no, 19,500 levels. So we want to see what's the reaction. Over in the mainland itself, mainland market actually continued to slide. This is yesterday's closing price, and you can see that the fall down from 4,169.45 despite a better than expected GDP numbers and retail sales prices have been falling rather sharply. We will see technically this market may actually only find support around the 3,935 levels. If this level fails, this market is definitely gunning for the 3,800 levels. Over in energy markets, Sorry. We saw that in March itself, the crude oil prices in terms of WTI actually hit the bottom at $64.33 and rebounded to $83.49 before we see a pullback. Now, this pullback has a potential to actually completely cover this gap that we saw on April the 1st upon the news that the OPEC Plus has actually cut production. So this beginning of this gap here is at $75.68. I still have the opinion that there's a possibility market may completely seal up this gap here and then start, before it rebound. But you can see that twice on Friday, last Friday, we can see the market hit a bottom of $76.69. And last night, again, this same level is being hit and the market has rebounded from there. So perhaps, just perhaps, the market may have already found a bottom and is getting ready to resume its rally. And if it's the case, I think the market may actually test last October high of $93.62 at the minimum. So we can see this is going to be a technical rebound. We will see whether it can sustain or do anything more beyond that. In the gold market, we can see gold has been in consolidation after falling from a high of $2,048.80. It hit a bottom here at $1,968.30 and it has bounced back to a high of $2,012.40. So between these two, the market is now trading within this band in price itself. So we see that this morning we have a bit of a spike up. So prices right now is just under $2,000 per ounce. And if this continues, if the market continues to edge higher, the area of interest for me will be $2,009 and $2,015 thereabout. The market cannot sustain beyond this level. It is very vulnerable for another decline to complete the larger degree pullback here. So if this is the case, look out for selling interest around this band of prices targeting the $1,930. Over in silver, we also saw the continuation pattern in the sense the market is not done with the corrective pullback. The high traded so far is $26.09, and you can see the market is likely to do this, okay, three-way pullback. But however, we can see if gold prices continue to edge higher into the ideal bracket price to sell, then maybe we can see the same thing in silver market. If that's the case, my area of interest will be $24.64 to $25.78. Look out for selling signals around here for another extended decline all the way to $24 per ounce. Okay, over in dollar, we can see dollar overnight has actually weakened. This morning we can see the continuation of the slide in dollar after hitting a high of 101.94. So in my opinion, this rebound is incomplete. Ideally, the market has found a bottom at this morning low at 100.97. If that's the case, because this level is actually the 61.8% retracements of this entire rise from 100.42 to 101.94. So if this is the case, there is a possibility the market may actually edge higher somewhere to test at the bare minimum this high here at 102.48. Okay, so again, we have to look for confirmation. Right now, we don't have confirmation. The market has found a bottom at this morning low at 100.97. So if it does, this is my outlook here. Because the dollar pulled back last night, you can see that other currencies have also rebounded, but they are all corrective, especially in the sterling. Sterling, after hitting a high of 125.45, has pulled back to 125.35, and we can see that the market has been trading sideways more or less, with this rebound looking very much like a three-wave rally. And this rally has actually hit a pocket of prices, which I think may actually cap this run. This pocket of prices is 124.88 to 125.17. So this morning we have a high. Let me see, 125.07. Yeah, 125.07. And if the market reverses from here, then market may be going back to test the nearby support. We can see that obvious level of support somewhere around 123.45 to 123.55 levels, because we have seen that twice this level has actually managed to hold this market. So until a new development happens, either the market surge past 125.45 or breaks below 123.45, the market is likely to go sideways for now. Okay, the one that actually become more that was more robust overnight was, to my surprise, is actually euro versus the dollar. I'm of the opinion that this market is actually quite vulnerable to a downside, but I also did mention yesterday that I would love to see another rally back into this 1.11 levels to, yeah. And if the market can go into this bracket of prices between 1.1090 to 100, that could actually set up the stage for another set of selling opportunity here, and let's see whether it does pans out that way. Okay, over in the Aussie market, market remains largely sideways. We have a high of 0.6805, and the market has been doing this pullback here. Did not quite hit my ideal target. The low traded last night was 0.6665 before it have a marginal, it have a bit of a rebound. If this market can extend lower, the area of interest for me will be 0.6617 to 0.6647. Hopefully, market can stop its decline here and getting ready to rebound. Okay. Over in the dollar yen structure is quite different from the dollar index. We can see the market for dollar yen actually went up to a high of 135.14 last Wednesday, and the market pulled back. Now the pullback has actually been interrupted with a low on Friday at 113.55 before it rebound. So this market here has another opportunity to challenge the upper end, although it looks more or less complete. The three-wave rebound looks more or less complete. But if the market should actually try one more round, the next area to me of interest would be at 134.45 to 135.75 levels. I've already gone short. I've already gone short dollar yen, but I would love to see if the market do another rebound beyond 135.14, then this will be my area of interest here. I still believe over time dollar yen may actually try to revisit the 129.65 levels. Over in dollar Canadian, we can see this structure is very different from dollar index, although it has been mimicking the price movement in the dollar index, but I think there's a bit of a divergence. Earlier on, you saw the dollar index has pulled back to the 61.8% retracement. But we don't see the same structure in dollar Canadian. In fact, the market has marginally taken out the April 10 high to a high of 135.67 overnight, and it has been stuck around this level. So if we see a deeper pullback in line with what we saw in the dollar index, then logically we will be looking at a 61.8% pullback, and that being 1.34. Okay, so if the market do that, don't be surprised, because it's just mimicking what we see in the dollar index. Now over in Bitcoin, the Bitcoin prices has been sliding, and I have mentioned the pullback from $31,000 and $35 looks a little bit irregular. There's a possibility market may be doing a 5-wave pattern here. So because this leg here from 30,500 does looks a little bit more aggressive. So that is the reason why I think this is likely to unfold as a 5-wave pattern. And that doesn't mean that it's going to turn bearish. It's just that the market has not finished its entire correction. So the bottoms we see this morning was at 26,981. So this bottom here may actually cause a rebound here, probably not much higher than 28,000. Okay, so if this is the case, the market may actually resume slightly below the low here that we saw at 27,000. We'll see what happens, because at the end of the day, I think the structure in the Bitcoin from the rise since December last year does looks to be quite constructive. So we'll see maybe in the near term we see some weakness, maybe in the medium to long term it is going to starting to look a little bit bullish to me. Okay, in the meantime, this is all I have for you. I will see you again tomorrow. Bye bye.